Good afternoon, everybody. Today is Wednesday, the 29th of June, 2011. Let's go ahead and take a look at this market. We had another up day here today. The S&P 500 was up $1.11. That is a spider of 0.86%, and it obviously took out what has been a recent barrier here at 130, and we've been observing that level like a lot of people have, as it's been really, if we go back to the beginning of the year, pretty an important level. We had obviously the April pullback lows in that area, and then just recently resistance on a number of occasions. So we had been in this little range really of 126.5 up to 130, and we were looking at this Monday, and it was really looking like no reason to expect that the market would do what it did. But at the same time, we saw that we got past that midpoint here. That's basically been, the market's been moving back and forth above and below that 128.5 level, and obviously we're back above it with a vengeance here the last 3 days. This week started out strong, and if we take a look at the 3-day chart, you can see the volume weighted average price for this week. We've remained obviously well above it. Today we had a gap higher through the 130 level. It pulled back and really it was a really nice test of that prior resistance level in that area. So when you take a look, for instance, at the 10-minute time frame, you can see here that this prior resistance almost perfectly became support. And I was observing in the chat room that I liked the way that it shook out below, initially that is, below the volume weighted average price, and then recovered back up through that. At that point, that's where I think it made sense to be long, basically the market after it had made a successful test of 130, and obviously it went a little bit below that 130 level, and that's what these support and resistance levels are. They're not meant to be a perfect exact line in the sand, although you could make the case that this one pretty much perfectly tested this prior resistance from June 22nd. Regardless, the market is moving forward here, and we're observing that the Russell 2000 had kind of been in the lead here the last few weeks or week and a half or so, and it's been making this pattern of higher highs and higher lows, and now the Russell 2000 is up at its declining 50-day moving average. It's close to this trend line, and we'll see if maybe this market gets a little bit further upside and then perhaps runs into resistance near the trend line. Not a prediction, but just an area to be aware of. So far, we're at the 50-day moving average here in the Russell, and just because we're at a moving average doesn't mean it will hold a support or resistance. Now, obviously, when we take a look at the 200-day moving average, we made a big deal about it. A lot of people made a big deal about the 200-day moving average, but I certainly didn't expect it would be that type of bounce that we got, not only in the Russell, but obviously, of course, in the S&P 500 as well. That really just kind of touched upon that intraday. These couple days we're briefly below it and rocketed higher here these last 3 days. So we have to look at this and say, where's the potential for resistance? Well, we have this this prior little support up in here near about 131.5 up to the 132 area. That's where we have that 50-day moving average crossing down through the 100-day moving average and this prior little area of support. So that's where it looks like this market has the potential to go to in the near term, and it may just continue to rocket higher up towards that level. I see right now the SPY is trading at 130.92. I'm not sure exactly if there was some news, but we're up another 20 cents here after the 4 o'clock official close. And the NASDAQ, of course, was also up, not as much, about half as much, about 0.41%. But the NASDAQ had a little bit more trouble, obviously, with that 200-day moving average. And now it looks like it's trying to make a move for the 50-day moving average up near that $57 level. And we can draw a trend line similar to what we did with the Russell and see it comes in that same area. So if we look at, what do people look at a lot? They look at Apple a lot, and Apple has had, as we know, this, it had the undercut of the 200-day moving average, which has turned out to be somewhat of a trap in the near term, and now it's had this huge run from 310, basically 311, up to 330. It's not a huge run, but 10%, and we've got this what looks like a nice easy bounce, but there was a lot of pain down in here, and now we're getting this bounce, and it didn't occur all at once. I mean, this big green day, we had a big gap down, and then the bullish outside reversal bar, but weakness the next day. So it's not as, if you're feeling left out in this, basically, you have to remember that trading and investing is about risk management, and that there's you're not going to catch the bulk of every, you're not going to catch every move, and if you do catch every move, you're certainly not going to catch the bulk of it. If you have good money management skills, that you have to be willing to miss some of the opportunities some of the time, by allowing the setups to kind of materialize in a lower risk way, and learn that, again, this market has been, I've repeated it over and over again, that the proper approach to this market still remains, and I wouldn't change anything I said about this in the last 2 weeks, is smaller share size, lowered lowered expectations, and you got to be a little bit quicker to move. The financials had a good day today, up 2%, but we still got this declining 50-day moving average. Eventually, this rally will run out of steam. I certainly wouldn't short into the strength. I wouldn't short at the 50-day moving average. But it's, we traded sideways for a little bit. We broke the resistance here, and now we're moving higher for at least a little bit. And we've got these bigger levels of resistance, which are now we should be looking to see hold as support, and more particular probably for the financials down near about 15 and a dime. I didn't take a look at that 30-minute chart on the SPY, but let's take a look at I guess I did. But this has again been the area of resistance, and now we would expect to see some support in this band of what had been resistance in here. So this was basically the band of resistance, and we would expect that now to become where support would be found. If we break down through and hold below 129.75, then perhaps we're going to get another leg lower. But this market has been more difficult to trade, in my opinion. I know some people are thriving, or do thrive in this type of environment. The trend line on the S&P 500, you can see, comes in at about 132.60. We could see that on that daily time frame as well. But so maybe we even overshoot these 50-day moving averages, because I think a lot of people are looking at it now saying, well, the 50-day moving average will become resistance, and it's definitely a potential level where sellers may show up, or the people who are buying aggressively, the shorts who are covering in here, if they're going to slow down their purchases up in this area, basically. And then we see the transition back to a more neutral and then a negative environment. The one area that was weak today, which was kind of surprising a little bit, is the semiconductor group. The semiconductors, as we know, had a hard move down to that 200-day moving average. They've been really choppy in this area. They had undercut the March lows, and this seems like it should have been a good candidate today in the last couple days for a little bit of upside bounce. You would have thought when the SPY got through the 130 level, you would have thought when the Qs yesterday got through the 55.5 level, that it wouldn't have been really, or that it would have been not led necessarily, but at least the semiconductors would have participated in this rally, and so far they haven't. Again, they were down 6 pennies today. They're up against that level that has been basically equivalent to the financials at 15 and a dime. It's been equivalent to S&P 500 130. It's been equivalent to this 55.5. So the semiconductors are clearly lagging. they may catch up, but trying to play the catch up game is a difficult. You generally want to go with the relative strength, that is, but I would certainly keep an eye on these semiconductors. We had big volume in here right up against this level, and it was unable to clear it for whatever reason today. There's still there remain sellers up in this 3950 to 3960 is this band of resistance right now. If we can get up through that level, then perhaps these semiconductors are going to see a little bit of further strength, perhaps up to this trend line, and also maybe near that 50-day moving average, or this prior important low in here near about 3450-ish or 60-ish or so. But you can't count on the semiconductors will catch up, but you get them past 33.45, 33.50 tomorrow, then I think that a risk-reward basis, it might make sense to see a trade in here with a stop down near the 33-ish area. For the semiconductors to play a little bit of catch up. So that's the way it's looking right now, and I am going to wrap it up right there. I've got some feedback, the last couple times that generally briefer and more to the point is appreciated. So I am going to tune out. Thanks for taking the time to stop by, and I will talk to you on Friday. Thank you.